Hello, best of listeners, and welcome to the best real estate investing advice ever show. I'm Theo Hicks, and we're back for another edition of the Actively Passive Investing Show with me and Travis Watts. Travis, how are you doing today?
Theo, I'm doing great. I'm super excited. This is one of my favorite topics, and I've never had a chance to dive into it deep, and hopefully we can do that today.
Yeah, so this topic that Travis is talking about is the FIRE movement, FIRE, which is an acronym that stands for Financial Independence and Retire Early. And so I was talking to Travis a little bit before the show that I've heard of this movement before. I've seen a few trailers for documentaries, but I am by no means an expert on this topic. So this will be mostly Travis talking, and maybe I'll ask him some follow-up questions to learn more. And so Travis, kind of take it away. What is FIRE movement? You said it's one of your favorite topics, so maybe tell us why it's your favorite topic, how you learned about it, things like that.
Yeah, exactly. I think I was just like you, Theo, a few years back, and I had heard that acronym, really couldn't tell you anything about it, didn't understand it. And here's the long and short of it. So I was raised by two very frugal parents. I think we've talked about that before. They taught me very well one side of the money equation, which is the saving and budgeting side. Nothing about investing, nothing about real estate, but very thankful for that. I've always had a good discipline there. And so, was raised that way, continued that throughout my life. Just frugality, I guess we could coin the term as that. And then all of a sudden, I started feeling really like I was the only one out there doing this. It was kind of a lonely existence. And then you start kind of second guessing it, thinking, is this kind of a stupid thing to do? Or does anyone else feel this way about, money? And then all of a sudden I discover FIRE movement, which is I wouldn't say it's a huge community, but it's a growing community of mostly millennials. I would say people in their 20s, 30s, and 40s for the most part. And the idea is this. A lot of people get this wrong when they first hear about the FIRE movement and the whole retire early thing. A lot of heat gets driven there. The movement is really about designing a life and a lifestyle that fits you, that complements you, right? So it's searching for things that bring you happiness, joy, fulfillment, excitement, and then creating a life around that. Now, I think a lot of people get caught up in the financial side of it, which we'll talk about in just a minute. But it's this idea that, hey, maybe I have a corporate job and I make good money, right? I make six figures or whatever. I'm an IT guy, an engineer, what have you. Well, I may like that to an extent, but realistically, could I see myself doing that from today or in my early 20s all the way through my late 60s to get to so-called retirement? Well, a lot of people are feeling like, no, that's just too long. That's too much of a commitment. And so it's this idea that you work aggressively to earn income early on, as early as you can, make as much money as you can using your highest and best skills, talents, credentials. Then you're going to live very frugally. So you're going to live on just basically as little of that income as possible for a period of time, not forever, but maybe 5 or 10 years, something like that. It's different for everyone. Then here's the most important element of that. You're not just going to save that money and throw it under your mattress, right? You have to invest that money into assets. Now, FIRE movement's all about stocks and index funds. But what I want to talk about today is how the FIRE movement can relate to real estate and how I've done that. So earn as much as you can, live on as little of that as possible, invest the difference into assets. And number 4 is just avoiding bad debt. A lot of people start out with bad debt. Maybe it's student loan debt, credit card debt. Get out of it. And then if you don't have it, don't get it, just stay out. And so that's one of the biggest thing that detracts people from starting their investing journey. So by doing that, it's incredible, but you see people all around. There's podcasts dedicated to this, as you mentioned, documentaries, books, all kinds of, there's conferences now around this topic. And you genuinely see people in their 30s retiring. And what I mean by that is not going to the golf course and moving into a 55 plus community and these kinds of things, but it's financial independence. Let's just focus on the first half of that acronym. That's what it's about. It's about financial independence. It's about having enough income, as we talked about on our previous podcast, how much is enough. It's just having enough to have lifestyle flexibility. You know, if you want to travel more, if you want to be more charitable, if you want to spend more time with your family, if you want to go ride around in an RV for 6 months, you know, you just have more options on lifestyle choices. So that's a little bit about what the movement is. And so really, like I said, what I really want to dive into though, is how most people view the FIRE movement as it pertains to stocks and index funds, but how I think you could shift that over to real estate. And I think that can be very impactful. And that's what I've done. So that's kind of what I want to pick up on there.
Yeah, sure. So let's kind of lay the groundwork. Maybe first talk about what people usually do. And so you said that really what will remain the same is the saving the money aspect. You know, we talked about this before, but you know, knowing what your number is, what's enough based off of your lifestyle. But the major difference is going to be what you're putting that money into, and then kind of based off of that, when you'll actually be able to achieve that enough number. And so maybe kind of walk us through what people traditionally do in the FIRE movement, as you mentioned, with stocks and index funds, and maybe kind of give us like a high level example too.
So I was getting real into this movement. I was getting real excited. I was so happy to see other people are thinking like I think, until it came to this aspect, which is the one thing I really disagree on many levels. Okay, so this is how it works in the traditional sense. They use what's called the 4% rule. The 4% rule is a withdrawal method off of your retirement accounts, right? Whether that be a brokerage account or actual retirement IRAs and Roths and 401ks. And what I mean is this, they say, okay, let's say you want to live on, you know, or you need 50,000 per year in income. So the way the 4% rule would work is that you need $1.25 million put into index funds. That's what like 90% plus in this movement are doing, are index funds. Something like what is the Vanguard? VTSAX, Vanguard Total Stock Market Index Fund, for example. Why Vanguard? Low fees. Why that particular one? It's a wide stock market index, so they claim you have some diversification that way. So if you have 1.25 million put into an index fund like that, what they say is, well, historically, I'm sure everyone listening has heard this before, but historically, over the last 50, 100 years, whatever, the stock market has returned, whatever, 8% annualized, right? Obviously, some years being 20 or 30%, some years being negative 40%, but we're just trying to find the middle ground here in the averages, and it's about 8%, give or take, depending on what you read and how you interpret that. But so the idea is if you're pulling 4% off your accounts per year to get $50,000 out, and it's returning 8 on average, that you've left yourself in there kind of a conservative buffer, right? And so that buffer can be used for inflation or the ups and downs or just a weird market, and we've never seen this kind of thing happen before, whatever. It's just a safety margin. So in theory, you're infinitely wealthy. If all you ever needed was 50,000 a year, you had 1.25 invested in something that historically does 8%. That's how it works, right? And so it's kind of a mindless thing to do, right? You have one strategy. You don't really need to learn anything else. Every dollar that you can invest, you just do, and you just do that for 5 or 10 years aggressively, or whenever you can hit that number, and then there you go, you're done. And that's how the FIRE movement works. Well, it's a little cute. Go ahead.
As a follow-up real quick. So essentially they're just going to like a bank or some broker, and then as they're making their money, they're just giving it to them and saying, hey, invest this in this index fund. And so they're kind of doing that every quarter, every year, or are they just doing it once they've hit that number?
Good question. So due to fees and financial advisors and all this, they're circumventing the whole system, and they're saying, hey, it's free to open a brokerage account or a retirement account at Vanguard or Fidelity or Charles Schwab. Okay, so they're going to do that, no cost. Okay, then they're going to go into a low cost index fund. So not like a mutual fund that usually has a higher, assets under management type of fee. I think VTSAX is like the lowest, fee. You could probably look that up as I'm talking, but that's why so many people in the FIRE movement choose it. So you're not using a financial advisor. The theory is nobody technically, statistically, can outperform, the stock market. Yes, people do, but it's not a sustainable long-term approach. It's not like someone outperforms it every single year for the rest of their life. So why pay somebody extra fees to basically match or underperform what the index funds do anyway? That's the theory. That's the philosophy. That's the mindset. That's strategy.
Got it.
So I'm thinking about that. I'm thinking, wow, 1.25, 4%. Okay. And I'm thinking about my real estate holdings. This happened several years ago. I'm thinking, well, when I buy a piece of real estate, what do I see as conservative cash flow, which is a completely different mindset. Cash flow versus equity, right? I'm not banking on things to go up in value. I'm just saying what gets collected out of rents and other income generating things on the property. Well, I came up with like 8%. 8% to me was kind of a conservative number. And let's just forget about the appreciation side of the real estate, the fact that it could go up just because of inflation, and that's what happens, or forced appreciation, you're making it better. But just take that completely out. Let's just look at cash flow. So if I put $100,000 into a single family home or a private placement or a syndication or what have you, my principal's locked in there. That's what allowed me to invest or buy the property. But the cash flow is what I could potentially live on, right? And it's what I do live on. And so I thought 8% to me is pretty conservative, as the FIRE movement sees 4% being conservative for the stock market. So I thought, well, then if that's true, you could actually get to where you want to go twice as fast. You could have 625,000 invested at 8% cash flow in real estate instead of 1.25 million at 4% in the stocks. And if you look at the yield on like a VTSAX or a S&P index, it's so low. It's not a cash flow play. It's like 1.6% or something, depending on when you check it out. So that's really hard to live on that kind of yield for cash flow. So this is just a big mindset shift. And the deeper I got into this, the more I found out that, there's just hardly anybody in this movement talking about real estate. And I thought that is the craziest thing, because unfortunately for so many of these people, they could get there so much quicker with half as much invested. So my wife and I, when was this? I don't know if it was earlier this year or last year, we went out to one of the biggest advocates for this movement is Pete. They call him Mr. Money Mustache, and he's a big blogger, things like that, of the FIRE movement. We went out to Longmont and we met with him. He has a co-working space, a bunch of FIRE movement, like-minded people. They call them mustachians. They do this like goofy little mustache thing. And I was asking him, I said, Pete, I said, this index fund stuff, I said, everyone's doing it. And I said, I'm kind of a real estate guy at heart. I said, do you own any real estate or whatever? And he said, Travis, he said, the index fund thing, he said, it's just worked. It's just worked historically. It just works for me. It works, like why change something that's working? And this is, of course, before COVID and as a, great bull run has been happening and stuff. And I just thought that's interesting. And it led me to think that there's probably a lot of people in this movement that just aren't in investor mindsets, right? So, and rightfully so, not everybody has the time, energy, effort, or interest to become an investor mindset or an entrepreneur or whatnot. And that's fine. But I think that's what gets so many people to buy into this concept is all I have to do is have a brokerage account and an index fund. And that's all I ever have to do for the rest of my life. And that's pretty simple. And that's some peace of mind there. But anyway, just wanted to point out that real estate's a great asset for cash flow. And if you're looking at it through the eyes of cash flow and not through equity, for those interested in this movement or pursuing this journey yourselves, that's something to definitely consider. You may not go fully in like I am with real estate, but at least maybe having a few rental properties or something could really help that equation out.
Yeah, no, you brought up a really good point there, because one thing that I first thought about when we were talking about the index funds is, okay, so I follow 4% rule. The example you gave was 50 grand a year, and so I need to invest 1.25 million. But I mean, at that point, really, I have my account with 1.25 million in it, and then I'm living off, and then every single dollar generated by that account is me using, and so that's gone at the end of the year, and I'm using the next 50, and so it's kind of always 50. Whereas for real estate, as you mentioned, you kind of were just focusing more on the cash flow and how you can get there twice as fast. But if you're investing in a 5-year or a 10-year syndication, then not only are you going to get, I mean, again, depending on what type of syndication it is, because sometimes you are just participating in the cash flow. Mm-hmm. If you're participating in the cash flow and the upside, then that original, let's say you invest 100 grand, you're making 8%, and then you can obviously live off of that 8%, $8,000 a year. But then at the end of 5 years, you're going to get, I don't know, 60 grand. And so now you've got 160 grand, and then you can, I don't know, pull that 60 grand out and do something fun with it. Or you could take that 160 grand, invest it in something else 5 years later, and then make more cash flow, and then either live off of that still, or kind of reinvest that more and more. Whereas I don't think you can do that with these index funds, right? There's no equity play here. It's just cash flow, right? Or is there equity play?
Yeah. So for an index fund, what you're banking on is not cash flow at all, right? You're just hoping that on average that account balance goes up 8%, and that you're just taking 4 out of it. So you've got a little buffer in there, but inflation's a real thing. So that 4% isn't just a gain. You're kind of meshed there. And that's the good thing about real estate. It often keeps up just automatically with inflation. We could make the case on and on, you and I, for real estate with the tax benefits and the leverage that you can use and the this, that, and the other. And I mean, we could go on and on, but I just want to paint the simple example of, if you're trying to live off of something, it doesn't sit well with me to sell off my nest egg. To have an account balance of $1 million and to say, I'm going to start selling it and then living on it. I don't like that concept. Yeah. With cash flow, it's not that way. That $100K I put into the property is still there. And then hopefully the equity and appreciation comes in too. But just, again, forget about that altogether. And I'm just talking about the cash flow. Yeah, it's just, it's a better asset for, in my opinion, for retiring on, because we all have to come around to needing some income. And I think real estate's one of the best asset classes to produce income. So,
do people ever do the life insurance with this FIRE movement?
Yeah. Some people, like the whole life, you mean, and kind of doing the infinite strategy and whatnot. Yeah. Some do, but I'm telling you, like, my theory, I need to do more research on this. I'm not an expert either. My theory, though, is that most people in this movement are not investor mindsets. Mm-hmm. It's just do this one thing and then you're good for life, and that's kind of like insurance too, right? Open up this whole life policy and just dump everything you got into it. Yeah. And so, you have to play to your strengths, obviously. I'm not suggesting real estate is right for everybody, but there's ways to do real estate passively. Even if you were to do the stock thing, there's REITs, there's real estate investment trusts, there's high dividend yield stocks. There's ways to create cash flow in that strategy besides just doing an index fund with a 1.6% yield on it, but that would be my suggestion, is focus on cash flow versus, the buy, hold, and pray that the stock market just goes up forever.
This is actually a great opportunity to plug the book we're working on right now, the passive investing book, because we have a full section in the book where we go over really every single passive investment I could think of. So index funds, mutual funds, REITs, high dividend stocks, regular stocks, private equity, and kind of just comparing all of those to one another in regards to risk, returns, feasibility, various other fees involved, just to say, hey, there's not one that's better or objectively the best. It's just, what do you want to get out of this? And then based off of, again, if you want a low fee type of a situation, and then you can do the Vanguard thing. If you want higher returns, you can do something else. So yeah, you actually haven't said any of the funds we don't have in there. So that's good. I think we have everything covered. One thing I did want to ask about this. So you mentioned that the traditional FIRE participant would place their money, they'd open up their own brokerage account, and they just kind of dump money in there, and then it'd be a set it and forget it. Yeah. The syndications, there is some more time that goes into it. And so for you, how much time are you spending on your passive real estate investments compared to either other investments you're doing or, what?
Yeah, exactly. What we call it, the actively passive show. It is active to a point, but it's fully intentional, A, and it's B, because I love it. It's my interest. It's my passion. This is what I like to research and learn. And, if it's a Saturday or Sunday and I'm sitting at home by myself, what am I doing? Probably a documentary, on financial stuff, or reading a book on that. And I fully recognize that's not most people. I get it. I totally get it. But for me, that's why this topic's even coming up. That's why not a lot of people are talking about the real estate side of the FIRE movement, because most people are just, everyone just wants the one thing, right? Let me just do one thing and then be done with it. Take the diet pill and lose 30 pounds. I don't want to actually work out or know about diets. So that's where it comes from. I spend, realistically, not a lot of time. I might seriously vet maybe one deal per week. It doesn't mean I'm investing in that deal. I'm just going through, I get sent, let's say, 4 deals a week from different syndication groups or whatever. And I pick one and I'll dive deep, just mainly for the education side of it, and then invest maybe in one a month or one every other month or something like that. So what does that equate to? I don't know, 2 hours a week or something like that. Not a lot of time. So it is mostly passive, which is what I preach and what I advocate. Doctors and the engineers, people they don't have the time. And I get that. You're already working 40, 50, 60 hours a week, sometimes more. You don't have the time to get out there and always fix and flip houses or do all this kind of research. So,
yeah, and you mentioned that a lot of that time is spent So you said it sounds like most of your time is spent on not actually analyzing a specific deal or reviewing financials, but kind of the other aspect that you mentioned, like watching a documentary or doing additional research. And obviously, if you are one of those people that don't have a lot of time, you don't have to spend all this time on deals, right? You can just listen to a show like ours and kind of take some takeaways and be able to quickly analyze deals. And as we're kind of talking about, they're just trade-offs, right? You're not going to have the magic investment where you don't do anything at all. You just press a button, your space bar on your computer, and then you make 1,000% return. That's just not how it works. So there's always going to be trade-offs. With the higher returns, there might be a little bit more risk, or might be a little more time investment spent. With the lower returns, it might be a little bit easier, but then it's going to take you a lot longer to get to that point. And so this is going to be trade-offs all the time.
Yeah, exactly. And the last thing I want to circle back to, something that we talked about at the beginning of the show, is that's what this movement's really all about. And it's more about lifestyle. It's more about happiness and fulfillment and making wiser and smarter choices, both for the planet, for yourself, for your family. There was a well-done documentary. It came out last year. It's called Playing with Fire. Maybe we can put a link somewhere. I don't know. I bought it on Amazon. I don't know all the outlets for it. It's got a little orange shopping cart looking, background to it, but it's great. What it is, it's a couple they're millennials. They're like in their early 30s, and they live out in San Diego, California, and they've got the BMW and the yacht club membership and the beach house and more or less what they've been doing, and they didn't even realize, is just kind of keeping up with the Joneses, from their subconscious. It wasn't intentional. It's just they thought they were doing what everybody does and should do. And as they did an exercise, this is anybody listening right now, seriously, hit pause and do this if you can. If you're driving or something, make a note to do this as soon as you can. It's a simple exercise, but it means a lot. It can mean a lot. It's life-changing. My wife and I did it. They did it in the documentary. All it is you write down the 10 things that make you happiest, the 10 things that bring you the most fulfillment, either daily, weekly, monthly, annually. You choose your time frame. And the point is, for this group, it was interesting, husband and wife, right? And it's like, playing with their newborn child, eating dinner at home, enjoying a nice piece of chocolate, going on a walk outside, riding bikes together. And they're thinking, if that's what brings us the most fulfillment, we could live anywhere. Why are we in like the most expensive place in the US, paying, $4,000 for housing and blah, blah, blah. So they end up moving. This documentary is just like an average couple that, they're not experts in the FIRE movement. They're just trying to learn as they go. They end up leaving San Diego. They go to, I think it was Bent, Oregon, and they just find cheaper housing and more outdoor activities and recreational things. They switch up their car and they reduce all their car payments. And it was really cool. It was just a cool thing to see. So that's called Playing with Fire. There's a lot of good books, a lot of good podcasts. So check out all that stuff if you want to learn more. But yeah, that's a little bit what it's about. So not to give it such a bad rep on, what are you going to do if you retire in your 30s? You're going to be bored out of your mind. That's not the point. It's not that you are going to retire. It's just that you're going to have that flexibility to do what brings you the most fulfillment and happiness.
Yeah, exactly. And I think we talked about this on one of the other shows, that you can do, maybe, again, think of a job you do if it didn't really matter. Like if you could do any job and the salary didn't matter, like what would you decide to do? Like my dad drives a bus. He loves it.
Yeah.
Because he's retired. He doesn't have to worry about the money. So the documentary, it's by Travis Shakespeare. So if you just do Playing with Fire, Travis Shakespeare, you will find it.
Cool.
So, all right, Travis. Well, again, appreciate you coming on. I enjoyed talking about FIRE. Glad I got to learn a little bit more about it. And make sure you guys check out that documentary. And then we did reference a lot of blog posts. So I'm going to try to remember to add some of those to the show notes for these shows moving forward, for some other secondary sources. So again, Travis, thank you. Best of listeners, as always, thank you for tuning in. Have a best ever day, and we'll talk to you tomorrow.
Thanks, everybody.